Crypto markets are shaping up to see an insane end to the year and smash all records, while TradFi markets are telling us what the majority of Wall Street is prepping for: the great debasement trade. Speaking of Wall Street, these players are going to do everything in their power to get you to capitulate before year-end highs because they were late to the party, far later than they would have liked, because instead of adopting this technology, they fought it by buying regulators and send crypto to an early grave, which explains the Ripple lawsuit. So yes, markets saw a pretty nasty dump on the day to the tune of $586 million in liquidations. And I get it can be quite frustrating. People might be impatient waiting for some new highs, as we have been for quite some time. But markets are already giving us our first major signals, and it's showing up in the bond markets, with the 10-year yield sitting near all-time highs that we haven't really seen since the great housing crisis of 2008. And this happens because investors and nations are charging the US government more interest in order to hold debt they are issuing. This is the longest period of time we remained at levels this high since the early 2000s after the dot-com bubble. And we just saw gold soar for another new all-time high to essentially $4,000 and is now sitting at a 27 plus trillion market cap. Bitcoin shortly followed, printing its new all-time high of $126,200. And yet today, the crypto market got hammered. I would argue that's probably because of leverage, but also a lot of engineering by institutional players trying to get you to capitulate. XRP sold off about 6.5% back down to 287. And I'm here to tell you, they want you to sell your bags to them at these prices. I say don't. Now, obviously, this isn't financial advice. This is just my opinion based on my experience over nearly a decade of investing in crypto and watching these happen over and over and over again. The real question is, why is this happening and why now? Well, faith in our leaders to govern and manage the currency we all work for, borrow in, save in, and ultimately try to retire through is eroding rapidly. Other central governments are no longer wanting to buy US treasuries at the same rate. And then at the same time, you have options for other assets like gold and now digital currencies like Bitcoin or XRP. It's because of our massive amounts of debt and our continued pace of what the Fed calls quantitative easing, which is just political speak for we want to inflate the currency and you will become poorer. We're seeing a global monetary shift away from the dollar in real time. And the dollar is weaker today than ever before, but you won't see that on the Dixie or the dollar chart. As you can see on the dollar chart, it looks like the dollar is trending up, but that's because it's weighed against a basket of other fiat currencies. When you actually weigh the dollar against a non-working asset, one that Warren Buffett doesn't even like, it still well outperforms the dollar and many other stocks. That said, going back to the late 60s, you can see that the value of each and every single dollar has declined relative to that of gold, now sitting at new all-time lows. The same remains true for Bitcoin, which is a far younger product, on a far steeper decline and down nearly 100% against Bitcoin going back to 2011. And although many people thought the downfall of the dollar would bring about a new currency or the BRICS currency, and some wild theories even suggested that we get gold again, but you have to remember, gold doesn't make for good money. It never did. It's great for redemption, but poor for economies of scale because it's difficult to transact, denominate, store, and move. And it looks like neither of these things are actually happening. Instead, the dollar is being dumped, and in return, people are buying stocks, Bitcoin, gold, and other assets that are going to do well if the dollar continues to decline. So in this video, we'll be covering all the information mentioned above and even diving into the charts to share some key pivot points and breakout levels to keep your eyes on. Also, want to let you know about today's video sponsor, I Trust Capital. If you want to invest in any one of the cryptos that they offer in your tax advantage Roth IRA or IRA account, major cryptos like Bitcoin, Ethereum, XRP, Solana, Doge, Dogecoin, obviously, but then they have access to a ton of other cryptos that you won't get anywhere else to plan for your future and retirement. Things like Chainlink, HBAR, World Liberty Financial, Aave, which is one of the best and the safest lending and borrowing DeFi protocols on planet Earth. You've got other major layer ones like Near, AI tokens like BitTensor, layer twos like Arbitrum, and the list continues to go on. They're always adding to this list, and arguably purchasing these cryptos inside of that IRA or Roth IRA are going to provide far greater benefits for your retirement in future than if you just did it on any exchange. So go ahead and click on that link below to either get started or to roll your IRA over to iTrust Capital. They're very safe, they're very trusted. They have over $14 billion in transactions. Their fees are extremely low, only when you buy and sell, but that's any exchange. They also charge no monthly or annual fees. There's no sales pitch or process or pressure to get you to invest in other products or services that they offer, because their team and support are literally on no commission, which means their only goal is to help you plan for your future. That said, you are 100% in control with this account, and you get to make all of your own investment decisions in any one of the cryptos that they provide access to. Also, if you get started now, before the funding bonus is up, you get $100 by using Bull Run 9 when you sign up. So go ahead and take advantage of that offer before it comes down by clicking on the link in the description or bio below. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul. First and foremost, I want to cover what just happened in the markets. A lot of people were getting really excited about some new rallies for new all-time highs. Everything looked like it was getting ready or primed to break out. Bitcoin was leading the market, hitting its first new all-time high in a little while to about $126,000, and then everything just got dumped. And arguably that is because of, yet again, leverage, greed, people taking on more than their balance or wallet can currently handle. And in the last 24 hours, we saw about $580 million in liquidations, which created for that little dump in virtually all of the major cryptos. That said, when you actually look at the open interest was climbing really rapidly alongside the price on a daily time frame, which whenever you get open interest increasing alongside price, that means longs are opening at the market. People are taking on a lot of leverage. Then we saw this dump, which is actually nice, and another little flush, but we're still above the $120,000 level, and that dip is being bought up. So yes, open interest dumped a little bit. We're seeing a few liquidations. If I come down to that hourly or 4-hour time frame, you can see that we had liquidations on Bitcoin to the tune of about $84 million on a single 4-hour candle when it came to Binance's Bitcoin USDT. If I were to look up XRP, you can see that the exact same thing occurred to the tune of about $16 million. Now, when you combine that across the board on all cryptos, all exchanges, all USD pairs, it does add up to about $580+ million, which is quite a bit. And that's what caused the dump from about $3.04 back down to $2.86. We're still trending to the upside. So when you zoom out, as long as we remain above that 275 range, we're still looking pretty happy and healthy. We have yet to break out on something like XRP, but you'll notice right here, again, open interest climbing pretty rapidly into those local highs. And then we get this breakdown in open interest, loads of liquidations. I think people are just greedy before the real pump, and that's what caused this dump. But it's important to remember that the long, great debasement trade is still on the table, and that's what Wall Street believes moving into Q4 of this year. The market is really giving you a critical warning and a signal that if you're not in different assets other than the dollar, you are going to get left behind. When everything is at an all-time high, you need to ask yourself something. What has changed? Well, safe haven assets are doing well. Risk on assets are doing well. Real estate is doing well. Crypto is doing well. Global bond yields and everything in between is hitting daily record highs. The denominator for most assets in this case is the US dollar, and that is what has changed. The US dollar is on track for its worst year in 40+ years, down 10% year to date. Not only only is that the numerator going up, but the denominator is going down, which is the dollar. Confidence in fiat currencies is at multi-decade lows, and that is exactly what I've mentioned over and over and over again. It's because confidence in our leadership in the central banks is at all-time lows. Virtually everyone wants to hold anything other than the dollar anymore. Or as Shinaka put it, we've entered the second Bretton Woods collapse. And at the same time, 60% of CPI items are rising greater than 3% as the Fed cuts rates into inflation. Now, speaking of the Fed, we are due for another interest rate decision on October 29th, which is a Wednesday this year. And with things at all-time highs, if the Fed says, hey, inflation is pretty bad, and we get a poor jobs reading with unemployment on October 10th, they're going to take this data into consideration and either remain flat at 425 basis points or likely lower another 25 basis points. In both scenarios, this is bullish for markets and argumentatively bearish for the dollar, which means every chart is screaming the same story. The fact that fiat is fracturing or failing. But what's really interesting is that this time there is no Bretton Woods coming, and he states that the system's replacement already exists, and that is Bitcoin. And as we've seen with gold, it's already pumping for some crazy all-time highs. Again, $27 trillion market cap, which when it comes to the grand scheme of global markets really isn't that much. I would argue that a better programmable form of gold is Bitcoin, which means Bitcoin should be at least half the size of gold in terms of its market cap in a new global monetary regime like we are experiencing right now, while at the same time, it's currently only sitting at $2.4 trillion, which means we should easily 5 to 7x from current day's prices. And if that were to occur with Bitcoin, there's no reason in heck why XRP couldn't be at least a $5 to $10 asset, potentially even by the end of the year. Now, nobody knows how high or how fast these things are going to soar, but the rate at which gold has been pumping leads me to believe that there's going to be a flight of capital into digital currencies as well. And in the same way that money rotates away from Bitcoin into altcoins, money will eventually rotate out of gold, which is the current leader, into cryptos, which is probably going to be Bitcoin first, and then into altcoins. So it's going to be like a rotation of gold, Bitcoin, altcoins. Now, some of you might know who Ken Griffin is. He's the CEO behind Citadel, which is a major market maker who was surrounded by a lot of controversy during the Robinhood GameStop era of like 2020 to 2021. However, I think he states the case pretty eloquently. Let's listen in to what he says.
Inflation is substantially above target and substantially above target in all forecasts for next year. I mean, it's part of the reason the dollar's depreciated by about 10% in the first half of this year. It's the single biggest decline in the US dollar in 6 months in 50 years. Gold is at record highs. And the appreciation in other dollar substitutes, to use that word loosely, in items like crypto, for example, is unbelievable. So we're seeing substantial asset inflation away from the dollar as people are looking for ways to effectively de-dollarize or de-risk their portfolios vis-a-vis U.S. sovereign risk.
Are you really seeing that?
No, just check the price of gold.
Well,
I mean, I don't have to look very hard.
It's a life of its own. Yeah.
What?
It's a life of its own, gold.
No, but it's a life of its own as you see sovereigns around the world, as you see central banks around the world, as you see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed. That's what's really concerning to me. And there's been plenty of published research in recent weeks, months, about foreign investors now, when they buy U.S. equities, hedging the returns back to their local currency. So that, again, is a bifurcation of I'm going to bet on American business, but I want to immunize some of my sovereign exposure to the United States.
And so this makes it extremely likely that we are going to continue to see some new all-time highs in virtually all assets that are already performing well against the dollar. That would include Bitcoin and XRP, which will likely follow Bitcoin. That said, even Morgan Stanley is jumping on board, as recently they stated they aim to support their financial advisors and clients who may flexibly allocate to cryptocurrency as a part of their multi-asset portfolios. This was never done before by them. Sure, they've done it for some clients, but now they're actually advising their financial advisors to go to all clients and do this, which GIC guides 16,000 advisors managing $2 trillion in savings and wealth for clients. This is huge. And again, this is going to provide a lot of needed extra gunpowder sitting on the sidelines, which isn't going to perform well in the dollar, and they're going to want to take advantage of this play. Then when you combine that with the fact that XRP whale holdings are now nearing a 3-year low. Now, in certain situations, if this was a bear market, I'd actually look at that as very negative news, but I look at this as very positive news, which means that the price is still holding up above 275, a very healthy, strong range. Yes, it's been range bound. Yes, we've been in a descending wedge or a triangle, but on a breakout, things are going to look really good. So imagine the majority of the people that were able to sell a large chunk of XRP are now officially out, which leaves the room open for new investors to enter. And any amount of buying is now going to push the price into a mega bullish end of the year where Bitcoin is doing very well. So this is actually a very positive outcome in bullish markets, a pretty negative outcome in bearish markets, because this would mean whales want to continue to exit. But if there are no buyers stepping in, the price is going to continue to dump. But when whales are exiting and you still have a very high price into a bullish environment, things are looking extra good on news like this. So looking at XRP on a weekly time frame, you can see that I drew a little horizontal support and resistance line. You can see that this line has acted as a strong support here at about 273 to 275 and a strong resistance back in December of 2024 where we sold off for a period of time. We've seen resistance at the line, we've seen support at the line, we even saw resistance back here on weekly candle closes in January of 2018. So when you really think about this, this is going to be a very hard breakdown for XRP in a bullish environment. And now we're seeing our first sign of strength after this nasty bearish candle all the way back down to lows of 270. We're seeing a new local high on the weekly. We're seeing a higher low on the wick to the downside. And we're just seeing a long range of support right here back down to about 280. So when we zoom into that 4-hour time frame, as long as we remain above the 275 range and we continue to trend inside of this descending wedge, things are totally fine and normal and natural. We're still waiting on that break above $3.10 to $3.12. Any break above there is going to be very good for XRP because it's likely going to go not only to its prior all-time high of $3.66, but likely for a new high. And my personal target, which is going to be a psychological resistance, is anywhere at that $4 to $5 range, but I think $5 is very likely on an XRP breakout, considering it's really not that far up from here and only about a 57% move on the breakout. Anywho, that is it for the video, folks. If you enjoyed it, be sure to subscribe to the channel and also check out altcoinpro.com. You can find the link in the description below. This is your one-stop shop to help you become a crypto millionaire this bull market cycle. Yes, we can help you to achieve a lot of your goals by the end of the year. Now, we obviously can't guarantee any one specific result, but we can guarantee is your 110% satisfaction. If you aren't happy with this thing or it's not for you, in 14 days, go ahead and ask for a refund and we'll give it to you. But we're so confident that we can help you to take advantage of everything the crypto market has to offer with our tools, training, resources, experts, community, you name it. That's the reason we've had nearly 1,000 members paying paying us $97 per month every single month for almost the last year. Most of them take advantage of one single opportunity that more than nets them their yearly amount. Then everything else is a free ride, whether it's the courses, whether it's the classes, the live calls. I do technical analysis calls every single Tuesday for our team, and these people have their questions answered live. We offer so much more on the other side. Go ahead and check it out, altcoinpro.com. Thanks so much for watching, and I will see you in the next video. Goodbye.